Hello, and welcome to this week's edition of Murphy's Market Minute. It's the first one of June, and it's just me, Nathaniel, today. Elliot is out of town. And as usual, it's been another interesting week in the markets and in the economy in general. But things are looking pretty good. The markets are looking pretty strong right now. The S&P 500 is actually above 6,000 for the first time since about mid-February. So that's good news right there, as well as the Nasdaq and Dow Jones. Everything's positive for the year at this point. And there's been a few things going on that have kind of moved the markets a little bit. An update on tariffs would be the fact that Trump's 50% tariff on steel and aluminum has gone into place. So that happened on Wednesday. There wasn't really a big effect in the market because of that. It was already priced in, most likely just because he had announced it previously, but it went into effect on Wednesday the 4th. And then a little bit of interesting stuff going on yesterday. So yesterday on Thursday, Trump had spoke with President Xi of China, which indicated, a positive sentiment across the market just because, they're agreeing to kind of get back to the trade negotiations and would be a bullish indicator for the markets. And as expected, I think the markets ticked up a little bit because of that. So that's good. And at this point, they're agreeing to meet in China and in the U.S. So Trump will go there. She will come here. Looking pretty good. They're also going to set up a meeting for representatives of both countries. And so, like I said, positive. But later on in the day, a little bit of volatility with a little dispute between President Trump and Elon Musk, particularly over the one big beautiful bill that includes all the tax cuts and a little bit of spending and some spending cuts. And Elon Musk isn't too happy with how much it adds to the deficit, although the thing that's really adding to the deficit is really the tax cuts that are being extended through that bill. So a little bit of fighting going on ended up causing Tesla stock to drop by around 15% yesterday, I think, and the market as a whole kind of ticked downwards. But this morning, though, we got some positive news with employment numbers. So the employment numbers for May came out this morning, and it was pretty good. So total non-farm payrolls, which what we normally measure, it increased by 139,000 jobs in May, and that's beating the expectations of 125,000. So stronger than expected, always a good thing. Although overall, kind of this hiring new jobs kind of slowing down in momentum overall, but still good to see a beat overall, by 14,000 jobs. Unemployment's holding steady at 4.2%. So the markets reacted pretty positively to this today. S&P 500 is up over 1% today. The Nasdaq is up almost 1.5%. So things are, bullish in the markets, at least as of today. It's always good news. And then that's pretty much all from this week, everything that's big. Otherwise, there was a report published, which is the ISM PMI report. So that's for the services. So services industry in the country, they publish a report each month that's got a baseline of 50. So anything above 50 is growth in the industry. Anything below 50 is a contraction. So the May's number for the services PMI was 49.9, which is a small contraction, but a contraction nonetheless, which is the first one since June of 2024. But again, that didn't really make a big impact on the market, likely because, such a small contraction, but it was below the expected 52. Otherwise, though, that's just about everything. I just want to hit up the poly market betting odds real quick because I think it's interesting and pretty telling, particularly this chart about the chance of a U.S. recession in 2025. Because if we back this up just barely over a month, beginning of May, we're looking at a 66% chance according to these betting markets. And that has kind of continued to drop up until today. Now it's down to 26. So it's down 40% in a couple months, or really 1 month. And that's likely because the expected GDP growth is looking pretty strong. Hearing numbers anywhere between 2 to 4% for this next quarter. So that should be good. And, realistically, the chance of a recession is becoming more and more unlikely. But otherwise, that's everything I've got today. Hope everybody has a great weekend. And Elliot will be back next week. And we'll talk to you then. All right, have a good one.